Now, there's a new financial company that you may have noticed creeping into the best buy tables of the money section of your weekend newspaper. It's called Zopa, and it was founded by the men from the Pru who set up the direct banking company Egg in the late 1990s. It's commonly described as a sort of financial eBay. It puts potential savers, lenders or borrowers directly in touch with each other, cutting out the need to deal with a financial institution. Even in this age of austerity, the company has seen its lending double in the last 12 months. We sent our reporter Adam Kirtley to speak to Chief Executive Giles Andrews to find out more.
Zopa is a very, very simple idea. By people lending money between themselves, the theory being that both sides, the lender gets a better deal than they would if they put the money in a bank, and the borrower pays less money than if they borrowed money from a bank.
I'm Sally Nielsen and I live just outside Bromley in Kent. I purchased a car last year, about a year ago, and I needed a loan to top up my savings. At the time, the banks weren't doing terribly well and had a very bad press with the public. Also, I'd had a nasty experience a few months prior to that with the Icelandic banks. I made an application one lunchtime to take out a £5,000 loan at 8.3%, which was comparable. And within 2 hours, I'd received an email back saying that I'd been accepted and the money would be in my bank account in 4 or 5 days.
It's more of a eBay meets Facebook for financial loans, in that what they offer is a platform for people to engage in lending and borrowing.
Chris Skinner is Chief Executive and Chairman of the Financial Services Club, which represents people in banking. He's been studying Zopa for the last few years.
It is very small. It has been growing reasonably rapidly in the last 18 months, 24 months because of the tightening of the credit lines from the banks. Having said that, it's not a bank and it's not a financial firm. Zopa, for example, for the main core lenders and borrowers, is not a financially regulated platform because it's just an eBay for people to come and offer money. So it's not the same as a bank in that context. It's based around a trust between the borrower and the lender who can almost eyeball each other remotely through the system. So as a result, you know who is lending the money to you and you feel a relationship with them, and vice versa.
Where does it sit in the context of other ways of saving and borrowing?
Well, obviously, there are the core building societies, there are alternatives, there are other online websites. One that I often talk about is Wonga, for example, which, if you're really stuck for money, is a very short-term lending platform. But they're totally different in that those are financial institutions, they are regulated by the Financial Services Authority. They're not in this social space as much. This is much more for people who want to engage with people on a person-to-person level relationship. In a financial context, it's not so much a core financial product.
Hi, I'm Martine Garland from Milton Keynes and I'm a lender on Zopa. It was mostly motivated by the despair at the low interest rates that we're currently receiving as savers. And I was also very impressed by the concept. I wanted Zopa to succeed and to shake up the banking sector. I think also because I'm currently running a social enterprise, I'm very keen on projects that support social goals rather than just shareholders.
And how much money did you decide to put in?
I decided to just put in £500 to start with and to evaluate that after a year. It isn't high risk and I'm now looking to put much more in, and I'm also looking to put more into the higher risk markets. I realised I probably played it a bit safe, and so actually 26 of my loans were to A-star markets, which means that they're very low risk. The average rate that I was receiving on those markets has been 7.78. Now, if we look down at the C markets, which are the much higher risk markets, I actually only had 2 loans going to there, which is a shame because their average interest rate was 10.9%, so that's quite a lot more attractive.
Chris, who's it aimed at? We're not really looking at a replacement for loan sharks, are we?
No, it's aimed at the mainstream borrowers that are the prime borrowers that the banks try and seek out. It's mainstream lending between people who have a credit rating that's trusted. So Zopa uses the core financial risk systems that the banks use when they look at people borrowing and the risk that they provide. Experian and Equifax and the rating companies that you and I would be rated against. So those are enabling the lenders, which are people like you and I who might have some savings that we want to get a higher interest rate against, to look at the risk that people are offering and then offer their money against either a very low risk to get low interest rates or high risk to get higher interest rates.
So how does Zopa use those financial risk systems? Chief Executive Giles Andrews again.
We have a series of different markets, we call them, ranging in risk grade. We imaginatively call them A star, A, B, C, and we have a young market or Y market for young people. And those are all prime markets. They represent slightly less than the top half of the UK population in terms of credit standing.
Right, so that's an important point. This is not a replacement for loan sharks or credit agencies or subprime lending.
No, Zopa is not a lender of last resort. So Zopa doesn't lend to people who typically wouldn't have been able to borrow money from banks. They're not people who would have been excluded from the banking sector under ordinary circumstances.
Shall I take the plunge and actually go through that process?
Why not? It'd be quite illuminating. I'll look away in all the appropriate moments.
OK, Giles, I'm going to apply to borrow £3,000. I need a second-hand car, something like that, and I'll do it over 36 months as opposed to 60 because I want to pay it off in 3 years, OK? So I've tapped in 3,000 in the how much do you want to borrow window, and I'm going to get a rate.
So this is showing that you'll get a typical rate of 11.2%. So we show here this will be the market applicable to an A rate. So you'll either do a little bit better than this or a little bit worse.
You've got to make money out of this. What are your charges, both for borrowers and lenders?
So if we go back to your personalised quote here, you'll see you're being told that includes the Zopa fee of £124.50 that's payable by the borrower. So effectively that comes out of the loan that you take from us. Then in addition to that, we charge our lenders a 1% fee.
A bit nervous now. OK, let's apply for this loan. There it goes. Now, Martine, you can actually find out quite a lot of detail about the sorts of things people are borrowing for. So in that way, you can sort of get closer to the emotion of why they're doing it.
Yeah, that's really, I think, what brings it to life. That's what makes Zopa so exciting, is that I can click on any of these users here and I can see how much did they borrow in total. So, for example, this user borrowed £13,000 in total. Now, only £10 of it was from me. So that's a lot of £10.
So this one here, £13,000, what do they want it for?
Well, this borrower who's in Blackburn, he wanted it towards his school fees. Then we've got another borrower down here who borrowed in total £3,800, and she'd put a note on her profile here that her husband had given her a car in the divorce settlement and it's broken down again, not unlike the marriage maybe. So that was quite interesting, and so that was a lender in Leicester. It's very interesting. Each month you can print out various reports, remembering that each person's actually only borrowing £10. You get a fantastic spreadsheet like this. So as you can see here, we've got a capital payment from user Cheese63, who's paid 26p, and that earned me an interest payment of 6p from Cheese63. Now, because they're all being lent £10, they're all paying 26p each week. If Cheese63 didn't pay, I'm 26p down. But on the scheme of things, as you can see, that's not really that high risk. Should this user default on their 26p, it's not going to cause a huge problem to me. So your risk is very spread.
Zopa loans are denominated in £10 units. A loan that a borrower gets, is, say, of £5,000, is made up of between probably 200 and 400 individual lender offers of £10, £20, £30, £40 per offer. We make sure you're lending to at least 50 and preferably more than 100 different borrowers, so that we spread the risk amongst all those borrowers, and so that your own portfolio, albeit only 50 or 100, starts behaving similarly to a population.
Martine, you seem very gung-ho about Zopa, but is there anything that is maybe a disadvantage, something you don't quite like about how it works?
One thing that you need to bear in mind is that this is for the long term. You're lending for a minimum of 3 years, maybe 5 years. So it's going to take 3 years or maybe 5 years before you get your money back with your interest on there. Now, one thing also to bear in mind is that they have a facility called Auto Lend, and if you tick Auto Lend, it lends back out the money as it comes in. So as I get my interest payments and my capital payments, it will put it back into the pool to be lent out again. And you think, oh, well, that sort of makes sense. And then you get one of those 4 o'clock in the morning moments of, hang on, I'm never going to get my money back if I do that. So some people, I imagine, turn Auto Lend on. I have to say I turn it off.
Finally, I have a personalised quote based on the information that I've given you. And, well, go on, you tell us.
So this quote is for you to borrow money at 11.13%, which I think was slightly lower than the rate we gave you when you started the process. And this is a unique quote for you. You've got half an hour to decide whether you either want to carry on with the application or not. And you're very welcome to take us up on that if you wish.
I don't really want. I can't afford a new car.
That was Adam Kirtley